This is your dose of daily market wisdom with master trader Nick Santiago. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more, go to inthemoneystocks.com.
Welcome. This is your daily dose of daily market wisdom with master trader Nick Santiago. I'm Kerry Lutz. Today is 2/22/21, and this is show number 210. So, Nick, we started off with a bang lower and then recovered a bit, and then what happened?
Yeah, it was really a roller coaster out here today. You had a big gap lower open this morning, and then you had, the normal rally on light volume. And then once we got to around 2 o'clock or so, the markets were just trending sideways, and then boom, we had a really, really good little sell-off here. So a little change in character because rarely do we get a late-day sell-off. But if you recall on Friday, we talked about that little bit of a divergence I was seeing with the Nasdaq 100 and the Nasdaq Composite. And today, the Nasdaq got absolutely hammered. It finished down 2.46% on the Composite. And the Nasdaq 100, which is the NDX, finished down 2.63%. That's quite a fall.
All right. So divergences are important, and they're also important on the way up. We'll be talking more about gold and silver lately. So was there any news or anything that could account for the dip?
I don't think so. I didn't see anything out there that, I'm sure the media will find some catalyst to talk about. They always do. But I don't know of any story or headlines out there. Maybe, you're going to hear a lot about interest rates going up. They were a little bit higher today. So the 10-year U.S. Treasury note yield was up 2.5 basis points to 1.37%. Now, that certainly is not a positive for technology with bond yields going up, but that's going to hurt some other areas as well. And, again, utilities could be affected by higher yield. Housing prices could be affected by a higher yield, even commercial real estate as well. So this story is just getting started here, but I'm sure there's going to be lots of different headlines you'll be seeing in the media.
Yeah, so interest rates are definitely not good for the market, huh?
Well, at this stage of the game, I don't think they are. I think when you're looking at a market that has been this beaten and battered, and honestly, we were, last year saying, please open up this economy. These guys just kept it down for so long, and they think things are just going to snap back with the, with the click of their heels. It just doesn't happen like that. So, we're in what I call the danger zone, and I've been waving the caution flag for the last couple of weeks. But we had a good day here at Bullseye. We closed out our JETS position second half for basically 14%. And we closed out a half of another position for over 5%. So it was a good day here.
Hey, well, I read somewhere that 92% of New York City restaurants are behind on their rent. So, but everything's fine. Biden's president, so we have nothing to worry about, huh?
Yeah, I guess. The funny thing when you say New York City restaurants are behind on their rent, but how many have shut down? How many small businesses have gone by the wayside? I have a friend that's been in a restaurant business with his family for over 40 years, and they had to close down. There's so many stories like that. It's heartbreaking, but this is where we are, and you have a service economy where, restaurants, hotels, things like that are such a big part of our GDP. Just think about the damage these guys done. I don't think they realize it. Well, perhaps they do.
Maybe they do it. Maybe that was the whole point.
Yeah.
Or they just don't really care. You could see the callousness of some of our leaders out there, people dying from their policies, and it just falls on deaf ears,
It's true. And, unfortunately, you can only keep these things, you can only print so much money. There's just going to become a day of reckoning, and that's, we'll see where we are going forward. But I think you still got to be very, very cautious out here right now.
Yeah, so is there any way they can print up more money and keep this thing going? I mean, eventually, we always talked about the Fed just buying stocks directly.
Yeah, I mean, they could always do that, but at some point, the system is built on confidence, and at some point, if you know that shell game is going on, you lose confidence, and it doesn't matter. You'll wind up like Zimbabwe.
Yep, that's really it, isn't it? So, the confidence and the first three, the root of confidence is con, right?
That's right. I never thought of it like that, but
Yeah.
well said.
Yeah, so hey, so we look at gold and silver, and not just gold and silver, but copper over $4, nickel, all the base metals are crushing it.
Yeah, base metals had a really big day again today, but so did the precious metals. If you look at gold today, the GLD was up 2.5 points. That's a 1.5% gain. Gold futures today up 4%. Gold futures today up 1.7%. But we're seeing a lot of commodities up. It's not just the metals or the base metals or the precious metals. Look at oil. People aren't. You just look at what you're paying at the pump right now. I mean, it's gone up dramatically, under $2, and now you're around 250, 260, 270. It's a big difference. Crude oil again today up almost 4%, finishing at 61.5 a barrel. It wasn't too long ago when they couldn't give crude away. Remember that?
Yeah, I remember that. It went negative. You had to pay them to take your oil.
That's right. That's right. And how times have changed now. So, we have a lot of disconnects out here. And that always is not a healthy market when you see that.
Yeah. So, looking ahead, what do you think? This is just the beginning of the market weakness here?
Yeah, I actually do think that. I think we're at the tip of the iceberg here. These guys have done so. I mean, government has been so awful, and I'm just being blunt here, but that's the truth. And now with the new administration, I mean, I just, I've already told you, if this guy really becomes president, you should sell everything. I'm still in that camp.
Yeah, so it's been awful, and now we're really paying the price.
Yeah, I mean, we're just look at what you're paying at the pump for gasoline. Energy stocks are doing really, really well, which I thought they wouldn't do as well. I thought oil would do well. I didn't think the energy stocks would do well, but they're following oil's coattails. And again, just really a lot of disconnects going on. That's not a healthy market. A lot of money printing. It's been going on for a long, long time, way before Biden got in here. So again, at some point the market's going to say, hey, wait a minute, what are we doing here? We can't just print endlessly and continue to just make money. It's like a game of musical chairs, and the market will tell you when the music stops, and not the Fed, not the central bankers.
Yep, and hey, the band on the Titanic played on until the water was over their heads, right?
That's right. They could fiddle so long until the fiddle got filled up. And, we might be at that point right now. I mean, just think about it. Remember when Ben Bernanke was in power, he kept saying, hey, there's no problems, there's no problems, there's no problems. Lowered the Fed funds rate to zero. Well, we've had the Fed funds rate at zero now for ages. I mean, and the Fed has already telegraphed they're going to keep that rate at zero until 2023. But, the market's saying something different. Bond yields are moving up. Commodity prices are moving up. I mean, the market is whistling a different tune here.
Yes, the market is definitely whistling a different tune, and many people are just whistling past the cemetery here, Nick. But eventually the truth will out, and so will the market.
Yep, that's what's going to eventually happen. The market's a very, very big place, and again, the central bank playbook is kind of well known by everybody. So, just watch the charts. That's what I tell everybody. Charts will tell you what you need to know.
All right, and what you need to know is the trade of the decade, perhaps the trade of your lifetime, and you go over to inthemoneystocks.com to find out about that. Make sure you're watching the Twitter feeds at ITMS, at Nick Santiago01, at Kerry Lutz, and send us your emails to kl@kerrylutz.com. Nick, we'll catch up with you tomorrow.
Sounds good, Kerry. Thank you. Have a great day.
And so concludes another episode of Daily Market Wisdom with Master Trader Nick Santiago. Be sure to go to his website, inthemoneystocks.com. Don't forget the Twitter feeds @ITMS and @NickSantiago01.